Is it death cross looming? Do you see more downward momentum or doom ahead?
Well, first of all, I would like to ask Ed, what's the opposite when the 50 or the 200-day crosses the 50? Because that happens a lot in this space as well. And he focused a lot on Bitcoin. Listen, I think this asset class, the surprising thing about this asset class is that it'll be one of the few asset classes that can withstand the macro headwinds, whether it's a hawkish Fed or anything else that happens geopolitically speaking. And the reason why is very simple. I mean, where I sit, I have a backstage pass, so to speak, as an operator, and the amount of inflow of talent, capital, and basic users is just astonishing. And that has not stopped. That has continued even with the short-term sell-off.
Well, and on that note, you've got a lot of investors invested this time with more capital than they've ever had before. Yes, there have been corrections before, but investors, mainstream investors, haven't had this much invested. Give us the mood of the investors out there and how they're feeling.
Yeah, I think the public investors have obviously they will be part of the broader market when they see growth stocks that are down 50, 60%. They have the same visceral feeling when they see the crypto markets down that much. But the venture investors, and they raised about 100 billion plus last year, they're still allocating more and more of that 100 billion towards crypto projects. And those VCs, they're actually investing no longer just in the enablers like the Coinbases, the on-ramps, the infrastructure. They are looking at the core of crypto. They're looking at the layer ones. They're looking at specific DeFi dApps. So the asset class can grow even if Bitcoin loses market share. Bitcoin, in fact, is only 40% of crypto. It was about 65, 70% just about a year and a half ago.
Now, everyone's talking about the Fed and rates. We heard Jay Powell's testimony at his confirmation hearing today. What will be the influence, you think, of Fed policy on crypto this year?
So I do think in the short term, it will affect the public market participants and the retail investors. But ultimately, and I've seen this in every single tech cycle, smart money will follow the innovation. And the innovation is happening on Web3. That is where the talent is going. That is where the applications being developed is going. That's where the developers are going. And that's where there's a crazy amount of growing usage there. So the VCs and the longer term money, they will follow the innovation, and then there will be a nice buffer for the asset class, especially for the tokens and the companies that are creating utility.
All right, let's talk about regulation. Jesse Powell, the CEO of Kraken, on the show at the end of last year, had this to say about regulation to come. Take a quick listen.
We're not against regulation at all. We're licensed all over the world. Very happy to work with regulators. It's about clarity, though, for us. There's a lot of people sitting on the sidelines just because they're not sure about it, and the uncertainty has a chilling effect on banking and across the board.
What kind of regulation, John, are you preparing for this year?
So we are always fully compliant. Just like Jesse's company, Kraken, we are in the US, so we do everything by the book, so to speak. The regulation will come, and it's actually a good thing, just like Jesse said. No one here is against regulation. They just want clarity, as he said. If there's certainty and you can play by a clear set of rules, you will keep a lot of innovation and you will keep a lot of the volume of trading in the US. I mean, part of the reason why the tech markets are so good in the US is because it's the deepest capital markets, and it's an environment that allows for innovation. We want to keep that development here, and we want to create deep capital markets. Clarity and rules will allow that to happen.
Meantime, JP Morgan recently released a report talking about Ethereum's merge. I'm curious what you're seeing there so far and what Ava is preparing for as that merge happens.
So I think that report, if I'm reading the same report that you talked about, they said a couple of things. One is that Ethereum's losing some market share to other layer ones like a Avalanche or other layer ones. It's also talked about bridging, correct? So I think the report had some good ideas in it. And I mean, if you think of all of these layer ones, all these blockchains, it's kind of like they're all different cities with their specific characteristics of, based on the technology and the community that's there. And each of these blockchains are starting to develop for different purposes, and the community showing up are there for different purposes. And for Web3 to really flourish, one has to get from one blockchain to another easily. So the Avalanche bridge, for instance, from Ethereum to Avalanche, $32 billion already traveled back and forth on that bridge. A net 6 has stayed in Avalanche. You are not going to get the best of crypto 3.0 unless all of these blockchains in a multi-chain will be able to connect to each other, and users can move around and play with different tools and different applications.
Given that you just launched Avalanche Bridge, I'm curious, this is what allows you to transfer assets to and from Ethereum. How is blockchain interoperability going, and what are you learning?
I think it's just taking off, frankly. And what we're learning is there are different reasons for each blockchain to flourish in certain areas. And they're trading off technology for other technology, and then certain community goes there, others go to a different one, but they all want to try different things at different times. It's no different from the Williamsburg Bridge connecting Manhattan to Brooklyn. People want to try different food, try different things. What we're learning is there is a real appetite to move back and forth. And the bridge that I just cited from Avalanche, again, in 6 months, we've seen $32 billion of assets move back and forth. That is an astonishing number, given that, think about it, DeFi as an asset class is only 100 to 150 billion.
By the way, back to your earlier question, Ed saying a golden cross is the opposite of a death cross when the bullish indicator is what lies ahead. Curious what your thoughts are on trends that we'll see in 22, whether it is in crypto, NFTs, VCs, the crossover of crypto and gaming. What are you most excited about? Golden cross
we're
or
excited.
Not?
So a couple of trends within crypto, and I think the asset class will have a golden cross, by the way. But within the asset class, one of the things that we're really exciting, and you talked about regulation, is an institutional DeFi product. So as in the JP Morgan report cited the embracing of DeFi from various institutions, I think tokenization of financial assets, and then also creating a playground, so to speak, where DeFi is done in a very compliant way. You're going to see a DeFi for institutional product out there. I'm very excited about that. Also very excited to see what's going to happen in gaming. And the reason why gaming is so important is because it's kind of like the gateway for adoption. NFTs was a great gateway for adoption in 2021. DeFi was accruing value, but the individual adoption was happening more rapidly in NFT. In 2022, that's going to happen on gaming. Gaming is really the intersection, all the good things about NFTs, gameplay, as well as DeFi. Some of the games that we're seeing, the creativity that's happening and creating the gamification of playing and earning and using your own unique NFT, it's going to take things closer to, this is part of to like a metaverse environment. And I think that's part of the reason why even Web2 companies like, Facebook or Meta now is so interested in the metaverse.